G'day and welcome back to another episode. Today's episode is focusing on the difference in mortgage repayments from a fixed rate home loan in Australia to a variable rate home loan, and specifically during the period of 2020 to 2023, late 2023. The reason we're using this period is because in the early 2020s, in the COVID sort of period, early to mid and even late 2020, we had extremely low interest rates, I should say cash rate, which led to very low rates when people went for a home loan and they would get a fixed rate or a variable rate. And what we want to show you is the difference in mortgage repayments. Now, the main reason we want to show you this is because a lot of people fixed their home loans in 2020 and a lot of those home loans are actually coming up to expiry. So when I say expiry is the fixed rate expires and it goes to a variable rate. So for example, you're in mid to late 2020 and you fix or lock in a rate of 2% or 2.5% for a 3-year period. And now in late 2023, it's coming up to expiry and you will change to a variable rate. And what that means is the variable rate is the rate which is the cash rate plus whatever the banks put on top. And that will be substantially different to what you locked in your rates at in 2020. So the graph in front of you shows the Australian cash rate. So during the period here of early 2020 all the way up to late 2023, we're seeing a large jump, or I should say interest rates hiking on a monthly basis. I think there was 13 odd interest rate hikes over this period to what we are currently sitting at, which is 4.35%. Which will be a large difference between what you potentially borrowed your money at. So let's use an example here. In 2020, you borrowed $750,000, so it doesn't matter what your property value is, we're just using this as an easy example. You borrowed $750,000 from the bank. You had an interest rate fixed at 2%. You're paying this on a monthly basis over a 30-year period, and we're just assuming $10 of fees. So you fix it in for 3 years, and over the last 3 years, approximately your monthly repayments would have been $2,782 per month. So over the past 3 years, it's been fixed. This has just been your monthly repayment. You know what you have to pay every month. But when the fixed rate comes up and it goes to variable, we can see that there will be a major change in your payments. So I'm going to use the exact same example, $750,000, and this is quite a conservative rate, to be honest, but say now your rate comes up, your fixed rate comes up and you go into a variable rate. So if you fix it at 2%, a very low rate, you're going to go to a higher rate. The current rates are anywhere between 6 and 7%. So I'm just going to use the lower sort of end. $750,000 at 6% a month over a 30-year period with $10 fees. So you're seeing your monthly repayments will now increase to $4,507. So remember, at 2%, $2,782 per month, 6%, $4,507. That's a big difference, just under $2,000 difference. Now, that is something that will make a lot of people stressed out, but hopefully most people have accounted for this, knowing that they were on a very low interest rate in the beginning, and that it would come up to a normal variable rate at the end of this 3-year period. There are some people who are still on these 2 or 2.5%, 3% lower rates who may have potentially fixed in for a 3, 4 or 5-year period. So their mortgages, their fixed rate mortgage may not come up until next year or the following year. This is more a video of people who are coming up now and want to get a better understanding of how much they'll actually be paying. So if you want to understand that, if your mortgage is coming up shortly from fixed to variable, you're not 100% sure how much you'll be paying, you haven't spoken to your bank or mortgage broker, just to give you a better idea, go to moneysmart.gov.au, go to the mortgage calculator, type in the amount you've borrowed, put in probably a higher interest rate than that. You can find what your interest rate may likely be by going to your bank. So for example, if you're with CBA, just go to fixed rate home loans, or go to the variable rate home loan section of the website, and that will be able to show you what the current variable rates are for mortgages. So you can type it in here. You've got a $750,000 mortgage. Now you're potentially paying we'll just do 6.5% it is probably higher than that monthly, and you will now see what you're paying. Likewise, if you have a $400,000 mortgage and you've gone from 2% up to 6.5%, now you'll understand what your monthly repayments are, which will be substantially different from what you are currently paying. Just another very basic video. All these online tools is something that you can use for free. It's really designed just so you get a better understanding of your mortgage repayments. Again, I always like to use Money Smart for these sort of calculators. If you have any questions at all or any comments, anything along these lines, please do feel free to leave it in the comments. Otherwise, thank you very much for watching the video as always. Have a great day, guys.